Welcome to our first EB weekly market recap. It is Sunday, March 17th, 2024. Happy Patty's Day to everybody out there. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats. And it's a pleasure to provide our Earnings Beats community with yet one more video. Hopefully you're going to enjoy this. I believe we're putting together some good quality content. So I'd love to get your feedback, maybe in the comments, what you think of the video. If you like the video, please hit that like button. That will help us with a lot of the algorithms and so forth at YouTube. Also, subscribe to our channel. All the subscriptions just, again, help us in a non-financial way, but it's certainly one way you can help us build our growing community. Next to the subscribe button, there is a little caret. And if you click on that and then just make sure you click on all, that will help you receive all of the various shows and things that we do here on YouTube for all of our community, Earnings Beats community members. All right, let's go ahead and get things started here with this first weekly market recap. I'm going to start off looking at some of the major indices. So we've got first the Dow Jones Industrial Average. And what I've done here, because this is a weekly market recap, I'm giving you weekly charts for the most part, at least on our major indices. One thing that's really stood out to me, and I think when you look at a 2-year chart like we have here, one thing that I believe stands out a little bit more is the fact that on the Dow, up until that late October low, you can see over the past couple of years, the Dow really wasn't participating in the move. That has changed in a big way since October. And so we're seeing money rotating and supporting other areas of the market besides just the Magnificent Seven or the NASDAQ. So this is all really good. This wide participation is very, very good for the overall market. Let's take a look at the S&P 500 on the same weekly chart. A little bit more strength in the S&P 500 from March through July, but then we went through the correction. And now you can see the S&P 500 moving higher as well. So again, seeing that broad participation in this rally, which is a good thing. The NASDAQ 100, this has been our leader. So if you go back to the beginning of 2023, we had a huge move up through the first half of the year that we really didn't see as much of on the other indices. After the correction, the NASDAQ has continued moving higher, but we're seeing at least some of the other areas of the market keeping up with the NASDAQ, and that's a very good thing. Also, if you've noticed here over the last few weeks, the NASDAQ's been going mostly sideways. Yes, we did break out to a new high, but we pulled back and now simply going more in sideways fashion as money rotates into some other areas of the market. I find that to be very, very bullish and constructive for our major indices. Let's talk a little bit about the small caps. Small caps, after going sideways for a while, you can see how the price action kept going up above and then below moving averages. Well, now look what's happening. Since that October low, we went above the moving averages. The 20-week moving average is above the 50, and price action is maintained above that 20-week moving average. That's very constructive. Looks much, much more bullish than this trendless action that we had been seeing previously. So good action there on the IWM. The MDY, which tracks the mid-cap 400 index, probably even stronger than the small caps, breaking out, pulling back, clear breakout to the upside. And you can see very, very few down weeks in mid-caps dating all the way back to the early part of November. It's like week after week seeing strength. And that's the way it was on the NASDAQ for a while. Now we're seeing that kind of move over in some other areas. Anytime we're getting wider and wider participation in a bull market, that is, in my opinion, something that will sustain that bull market. The money's coming out of the NASDAQ isn't leaving the market. It's rotating. I find that bullish. Sector summary. This again for last week. Energy led the action last week, gaining 3.84%. Materials up 1.62%. Some of that may have been due to the higher inflationary reports than we were expecting. We'll talk about that in just a minute or two. But we did see those two areas leading. But if you look beneath those two, consumer staples, financial sector, industrials, these are all more value-oriented areas of the market that are starting to see strength, relative strength. And again, money's not leaving the market. it's rotating, and that's a good sign. Down further on this list, you'll see technology down almost 1% last week. Not a really good week for technology, but not a horrible week either. It's still kind of hanging in. The technology absolute chart still looks good. Relative chart looks good, although we're starting to see a little bit of short-term relative weakness for a short period of time, or even for maybe even a lengthier period of time. That's not bad, as long as the money is still rotating into some other key areas that can lead our market to the upside, namely financials and industrials, and even what I consider to be our neutral sectors, energy and materials. Those four groups leading to the upside, I view still as quite bullish here in the market. Let's move on to the relative strength of industry groups. So again, this is for last week. And what I'm showing you here are the industry group ticker symbols relative to the S&P 500, and then sorting them by percentage change. So by doing this over the last week, it tells me which groups have been leading the market to the upside. Now, the way that I number these charts within the chart list is the relative strength chart list is I have numbers for each sector. So for materials, it's always going to be 011-XLB. And then I have the industry groups numbered from 1 to however many industry groups are in that sector. And then I show the ticker symbol relative to the S&P 500. So you got a couple of, well, you got non-ferrous metals, which basically is Freeport-McMoRan, the stock. FCX had a great week last week. So that was our leading industry group, non-ferrous metals. We had a couple energy. And if you just look at the sector here that's represented, we got materials, energy, financials, consumer staples, energy, consumer staples, financials, industrials, materials, healthcare, financials, industrials. For the last year and a half of this bull market, we have been seeing technology, communication services, consumer discretionary. Where are they on this list? I don't see them. Top 16 groups, all of them outside of those three key aggressive groups. Money is rotating. How about to the downside? What didn't perform well? Again, look at the sector ETFs here. Materials, technology, consumer discretionary, energy, consumer discretionary, communication services, technology. Then we've got a real estate, industrials, consumer discretionary, financials, consumer discretionary, technology. So we look again, top 15, 16 groups to the downside, and it's most of those aggressive areas. So you don't even have to look at anything else. You know, just from what I've discussed here in the first few minutes, that it's a risk-off environment now. Money is rotating away from those aggressive areas. And actually, instead of leaving the market and watching our major indices drop significantly, instead what we're seeing is money rotating into some more value-oriented or defensive areas of the market. That's okay for a period of time. And to be honest, if you're a fan of history and you're a fan of earnings beats, because we talk about history a lot, from the middle part of February through the end of March, money tends to rotate. That's what historically happens. Also, if you know anything about the presidential election year cycle, the month of February tends to be a very difficult month. So what we're seeing right now kind of lines up with what we should be expecting anyway. So that's where we stand there. Let's talk a little bit about key economic reports last week. Two big inflation reports. We had the February CPI report come out along with the February PPI. So that's inflation at the consumer level and inflation at the producer level. I'm mostly concerned about the consumer level, and I think the Fed is as well. But if it's high at the producer level, a lot of times it could feed into what we see at the consumer level. So this is a chart of the consumer price index going back 5 decades. And what I want to point out here is that even though we saw the the core CPI last week come in higher than expected, 0.4 versus 0.3, one thing you have to understand, I've got a 12-month rate of change on the core CPI here in this little panel. And then here's the 1-month rate of change. And so if you look at the 1 month rate of change, you'll see that, yes, it was 0.4%, but it was rounded up from 0.36. So it wasn't quite as bad as it looks, when folks report on it, because 0.4 versus 0.3 sounds like a bigger deal than 0.36% versus 0.3. Anyway, still came in higher than expected. But what I want to point out is you can see the steady progress that's been made against inflation at the consumer level for the past 3 years. We peaked on our monthly rates all the way back in 2021. So it was roughly 1 year after the pandemic started. Remember, we shut everything down for a month. So of course, a year later, you're going to have a lot more demand. You've cut supply from earlier, and as a result, we had that initial spike. That inflation, the 12-month or the annual rate, had a twin top in 2022, the second of which coincided almost exactly with the cyclical bear market bottom that we saw in October of 2022. Since then, and this is history, if you go back and you see when inflation starts to come down on an annual basis, the stock market historically goes higher. We've seen it many times. This is no different. What we've been seeing, 2022, the inflation rate's been coming down. What have stocks been doing? Everybody thinks we're going to keep going lower, but stock market keeps going higher. Continues to make the bears look somewhat foolish, continuing to bank on prices going down. They haven't. If we move on to the producer price index, here is the 12-month rate of change. Here's the 1 month rate of change. And again, if you see the peak occurred in the middle of 2022, fairly close to when we saw the market bottom. Since then, we've come down. Not only have we come down, I would argue that we have completely taken inflation out of, there is no real inflation problem any longer at the producer level. The annual rate's back into the twos, and the monthly rate is kind of right what we experience normally, between 0 and 0.5%. That's where we've been now for the better part of the last year. So the core PPI already looks pretty tame to me. One other big economic report last week was retail sales for February, came out on Tuesday. And so here's the XRT. This is a widely diversified ETF that tracks many retail stocks out there. And I'm looking at it, and even though retail sales came in slightly below expectations, really the rest of the week was kind of flat. And I would argue that retail sales are looking pretty good. And if you look at a longer-term weekly chart, retail sales peaked at the end of 2021 before we went into that cyclical bear market. But after going through that cyclical bear market, if you look at these reaction highs coming across here on the XRT, they were at about 73, 74. Well, recently, in just the last month or so, we have taken out that key resistance level on the weekly chart. And I'm seeing what looks to me now like an uptrending XRT, which is really good news for a lot of the small caps and mid caps. Got plenty of retailers in those groups and those asset classes. And so this is good news for the areas where we're seeing money rotate into. So I know a lot of people like to focus on the Mag 7, and the Mag 7 is great because they're among the most aggressive stocks and they tend to grow their earnings very rapidly. But I'm finding a lot of bullishness in the fact that this money is now rotating into some other key areas of the market. It's not just about the Mag 7. Look at them. Apple struggling, Tesla struggling, not just struggling, they've broken down. And yet the market just keeps going up. S&P 500's gone up without those guys. So now everybody who's, been talking about the market is only about the Mag 7. That's the only thing lifting the market. Well, you're going to have to find a new story because that's not the case any longer. All right, let's move on. I want to talk about some key earnings from last week. Oracle, big move to the upside. And I have some numbers for you. Let me see if I can pull those up. Oracle, $13.28 billion in revenues, slightly above the estimates, 13.27, and earnings came in at $1.41 versus $1.37. You can see the gap up. We've been selling off a little bit, so it almost looks to me like maybe Oracle will maybe revert back to its 20-day moving average or maybe these tops coming across here near 118. Not a whole lot more to the downside to get there. That's what this chart looks like to me. Moving on, I don't know how to pronounce this name, so I'm not going to try, but I do know how to pronounce the ticker symbols, BZ. Another great earnings report. And this one, after gapping up on massive volume, 15 million shares, opening near 19, got up over 21. 3 days later, all the way back to the scene of the crime, back down at 19. I like it when they come back down and test the top of gap support. One to keep an eye on. Big beat on revenues. Earnings came in 20 cents versus 17 cents. How about EGY? You an energy fan, small cap energy fan, or at least a small dollar energy fan? EGY, which is Valco Energy, big gap up here, taking out all of this sideways action. That's a really nice move. It's only a $5.50, $5.60 stock. So for those of you who like small dollar stocks, maybe this one's for you. They easily beat revenues, 149 million versus 130 million. And they beat earnings per share, crushed earnings per share, 37 cents versus 15. And we'll keep moving on. WSM, another one, Williams-Sonoma, big earnings report, big gap up. All these companies, by the way, looking at the charts, you'll see some really nice AD lines, which suggests to me that not only are prices going up, but we're seeing accumulation. We're not seeing gap ups and then pullbacks. We're seeing gaps and continuing movement to the upside, which is, in my opinion, much more bullish. Big beat on WSM, 544 earnings versus 506. So nice little breakout there with those strong numbers. Dick's Sporting, DKS. Another big gap up with earnings. AD line's been strengthening. Nice move. Fundamentally, 385 in earnings versus 335 expected. Pretty big number there. They also easily beat on revenues, 3.88 billion versus 3.78 billion. And this is one that every once in a while, you just get one of those reports which is a head scratcher. So I'm looking at Ulta Beauty. This is what they did. They came out, they beat revenues, 3.55 billion versus 3.52. Their earnings came in at 808 versus 749. They raised guidance and the stock dropped $60 at the opening bell. It was an over 10% decliner at the opening bell. So a lot of good news built in. We gapped down, and I've told members at Earnings Beats, this is one of my favorite trades. When I get a stock that has absolutely been flying, showing great relative strength, they beat their earnings, they beat their revenue, or they beat earnings estimates, they beat revenue estimates, and they raised guidance. What's wrong with this picture? The stock gap's down $60. I think that's just a, profit on a silver platter right there. I like jumping into stocks that gap down like that after a really good earnings report. It came back. I suspect we're going to go back to new highs, 52-week highs. Might have to consolidate for a little bit, but I do believe with this report and all of that buying that took place after the gap down, I suspect we're going higher on Ulta. All right, moving on. Breakouts and breakdowns. I want to just talk about a few stocks here again. STLD, Steel Dynamics. Talked about materials having a good week last week. This is one of the reasons why we saw steel stocks moving up, Steel Dynamics breaking out. You can see the volume expanded down here to almost 4 million shares. And again, cleared all those recent relative highs. So nice breakout there. ISRG, I'm going to give you a few that haven't quite broken out, but these are ones that I'm keeping a close eye on. If you look at the weekly chart on ISRG, you will see 360 to 370 has been big resistance until just recently. In February, late January into February, we took out that resistance, moved up above 400 and now pulled back. So when you're looking at the daily chart, you didn't see that big top around the 370 area, but now we've got that, and we've got the 50-day moving up and in the 370s right now. We, after a big gap up on Friday, pulled back, but then we closed back near the highs, and you can see what that did to the AD line. Soaring back, getting ready to make a new high. I like this stock. Let's get that breakout first. Also, ATKR. This is in the electrical components area. Big breakout here. You can clearly see double top. up at about the 162.5, 165 area. We broke above it, went back, tested that area, and it broken out again. Stock looks good. One last one, COR. This is Cencora. And again, looking down below here, it's in the medical supplies area. It's been one of the leaders. It's just sideways consolidating after a big move back at the end of January, early February. But notice these last couple of days, we've been seeing gap downs, or at least we've seen movement higher during the trading day, leaving these hollow candles. And as a result, you're seeing that AD line threatening to make another breakout. Give me a close above 240, and I think COR could be on its next run. Healthy pullbacks. I'm going to go through these pretty quickly. The first one I show you here is on our strong earnings chart list. We keep a lot of chart lists to do a lot of research and so forth for our members at Earnings Beats. Here was the big move up with earnings. We've been pulling back now for the last 2-3 weeks. We've dropped from 34 and change down to 27, getting very close to that gap support. I think 25 to 27 is a key area of support on the stock, and we're just now starting to hit that area. Moving on, the rest of these stocks come from our raised guidance chart list. Some of them may also be on our strong earnings chart list, but I was actually pulling them off of raised guidance. IoT, this was a stock that I actually gotten into, got stopped out, but went in, put in a hammer on its 20-day moving average. I got back in at the close on Friday. Just full disclosure, I own this one, but I love that breakout. Look at the volume on the breakout. Didn't expect it to pull back below this gap. That's why initially I got stopped out. But sometimes you go down, you hit that 20-day and you reverse off of that. That's what I'm taking a shot with IoT. Great AD line. I think stock goes higher. Bandwidth, huge move recently from $12 up to $21. Look at that false breakout. That usually tells you, be careful, it's going to go lower. And it did. The last 2 days, we have seen from that false breakout over 2150, the stock move all the way back down into the low 18s. We've got gap support and the 20-day moving average just below 18. This is one that's getting close to a key area of support. How about OKTA, Okta, software company, big gap up. You can see the trading range. Again, you see another false breakout with a pullback. Now we're getting closer to the lower end of the range after earnings, and also that rising 20-day moving average. I think 102.50, even down maybe to 102, that would be a very interesting area on Okta for possible entry. Last two I have for you, PSTG. This is Pure Storage. Big move up from 42 to 58 over just maybe a little over a week. And now we're almost back down to the top of that gap support, testing the 20-day moving average. I think this one from here down to about 47.75 looks pretty good. And the final one, this is a really risky one. Went up on massive volume. It's come back down significantly. It actually went a little bit below the top of gap support, but now perhaps testing the 20-day moving average. I'd like to see a reversing candle. Maybe a intraday move to the downside and a hammer prints with a big recovery in the afternoon. Maybe that occurs at 20-day. Maybe it happens on Monday. I don't know. Otherwise, look for price support at about 142 and the bottom of gap support all the way down at 130. But this was a stock that was at 185 on massive volume. As it pulls back, it's starting, the reward to risk is starting to get better and better. All right. That's basically what I had for you for a recap for the week ending March 15th. So March 11th through March 15th. Some of the individual stocks I think look good. The areas of the market, the fact that we're now more risk off, all of those things contributing to a sideways move last week, but really, in my opinion, a bullish move because we're starting to see more and more of these value-oriented and defensive stocks and energy and materials, which I don't really put into either one of those categories. It's kind of just those two are more neutral sectors to me, impacted by a lot of things outside of what's going on in the U.S. I mean, geopolitical concerns can also trigger movements to the upside or downside. Really have to watch the dollar on those groups. I like those groups in the short term, longer term, not so much. And I'm talking about energy and materials because the dollar has continued to be in a longer term uptrend. And when that happens, energy and materials over the long term tend to underperform. So we're getting a nice pop short term. Just be careful. unless that dollar falls, I would probably be thinking about taking profits quickly in both energy and materials. All right, that's it for me. I hope you enjoyed this. Please like the video, subscribe to our channel, and leave a comment. What did you think of this market recap? This is something I'm thinking about providing to our community, so I'd really like to get your feedback, so please comment below. Have a great week, everybody. Hopefully, bull market continues, but we are in that month of March, which can be a little difficult and challenging. So stay on your toes out there. Happy trading, everybody.